Wow, people better wake up and pay attention right now. What happened on September 17th was in many ways earth-shattering. It might have seemed small to the dumb folks on cable news, but it was anything but. Because on September 17th, Federal Reserve Chair Jerome Powell stepped up to the podium in Washington, D.C., delivered a decision that basically reverberated far beyond the marble halls of the Fed building. The media has no clue about what this really means for Americans or America itself, and the clash right now between the BRICS nations and the U.S.-led, U.S.-backed dollar order. It's effectively a new monetary system that has been unleashed. So the Obama-Biden era basically is now officially dead.
This also gives the internet one last chance to talk about our bromance.
And the media didn't cover it because there's just too many moving pieces, and it would take these clowns far too much time trying to connect all of the dots to properly explain what happened. But we're going to try to do it for you here today. But first, we know with certainty that last Wednesday was the final day of the dollar's 2008 to 2025 era of deep state manipulation. Again, this Obama manipulation era is coming to an end, and I'll explain it. For 5 years, the Fed choked American businesses and individuals and enriched the elites. We saw it happen. Well, this ends right now. What few people fail to realize is just how historic this period we're embarking upon is right now. I mean, nothing in the past 80 years comes close. And it brings with it a huge opportunity in the gold sector that we've not seen since 1971, in my opinion. I mean, needless to say, I've been waiting for this one for a very long time. So let's go through all of this in detail right now. This rate cut was the death knell for a 3-decade reign for the U.S. dollar's unchallenged tenure as the world's de facto reserve currency from 1993 to 2025, after the fall of the Soviet Union. Hyper-globalization enriched a cabal of elites, entrenched a shadowy deep state, and supercharged the Chinese Communist Party's export machine, while all the while bleeding America's heartland totally dry. You know, I honestly feel like that's the best summary of what just happened. So if you need to rewind the video, do it right now and hit replay. Replay what I just said there. You see, Trump has just managed to pull off a seismic shift event because MAGA has entered the halls of the deep state's Federal Reserve. The newest governor, Stephen Moran, Trump's hand-picked economic warrior, and this means the beginning of the abolishing of the Fed is here. Think of this as like killing the Fed from inside, like the rot. Similar to what he's doing at the Department of Education right now, destroying it from the inside out. Now, Trump's vision is for a Fed that's no longer insulated in an ivory tower sort of independence, but instead it'll be fused at the hip with the Treasury Department, because Moscow and Beijing are moving at lightning speed right now to build a gold-backed counterbalance to the U.S. dollar. So the Fed and the Treasury have been totally out of step. So a little history here. From 1993, when the Clinton-era NAFTA and World Trade Organization deals locked in dollar hegemony, the reserve asset was hoarded by central banks worldwide. It peaked at 71% of global allocations. And of course, it exacted a brutal toll on ordinary Americans when all of these other countries were hoarding the U.S. dollar. Factories shut down in the Rust Belt, wages stagnated, cheap Chinese imports flooded store shelves, trillions in trade deficits funneled all the wealth upward to Wall Street elites. And the deep state apparatus that thrived on all these endless wars and surveillance states, yeah, they exploded. So businesses left America, went to Mexico, and the Chinese Communist Party gorged itself on the spoils. And like Trump says, who can blame them? It was like a massive, nearly free buffet of crab legs, steak, and they got fat.
Get in my belly!
Then a perpetual trade surplus ballooned to $400 billion. And man, did it fund China's rise. We basically paid for China's military colossus that they have now, from hypersonic missiles to South China Sea fortresses. America's middle class footed the bill for that. Their productivity gains siphoned off to fund a rival's ascent, you could call it. So Trump smells the danger that's floating around right now, and this rate cut and Moran's appointment was the first shot of the currency war with China and Russia. Make no mistake about it. You thought tariffs were the start of this war? So to fund the colossal golden era that Trump envisions, a $1 trillion blitz on AI supremacy, Mars colonization, building a moon base they just announced, and hypersonic missile defenses and a new golden dome over the United States, The government needs borrowing costs slashed down to the bone. Without low rates, the U.S. risks forfeiting this AI race to Huawei's quantum leaps, to Baidu's data empires all across China. They're already outpacing OpenAI, ChatGPT and patent filings by 40% in 2025. So basically, they are crushing us right now. And the space race, China's Tiangong station orbits unchallenged.
The Chinese space program recently completed a major milestone with their Tiangong space station.
Russia is planning moon lunar bases right now. The U.S. is playing catch up. And geopolitically, a cash-strapped America watches helplessly as the CCP is entering Latin and Central America. $200 billion new Belt and Road loans into Latin America. They grabbed Nicaragua's ports, Venezuela's oil. And this U.S. dollar collapse is inevitable. It's imminent, and it's unavoidable, by the way, as we've been warning you. President Trump has been calling for a weaker dollar now for months.
Why has the dollar fallen so much? And are you concerned about that?
Well, I'm a person that likes a strong dollar, but a weak dollar makes you a hell of a lot more money. Now, it doesn't sound good, but you make a hell of a lot more money with a weaker dollar. Not a weak dollar, but a weaker dollar than you do with a strong dollar.
China has been dumping its U.S. Treasury holdings by $76 billion in the last quarter alone. That's the sharpest drop since 2009. Beijing is not bluffing here. It's reallocating to yuan swaps with 40-plus BRICS nations right now, where 90% of the Sino-Russian trade bypasses the U.S. dollar. No more U.S. dollars for China and Russia. They've pivoted. Russia pivoted to gold-backed rubles. And their summit a few weeks ago, China invited 30 nations to blueprint a gold-yuan trade architecture, explicitly framing de-dollarization as a multipolar justice. We're done with your U.S. dollar. No more unipolar order. We want multipolar justice. So the dominoes are falling. And if you look at IMF data today, the global dollar reserves dipped to 58% just in this quarter, second quarter of 2025. That's the lowest since 2000. Meanwhile, Beijing is hoarding 2,300 tons of gold while repatriating bars from London vaults right now. Russia's vaults are filled, 2,300 tons of gold as well. So if the dollar isn't weakened, as Moran insists, the U.S. can't beat China. Trump's golden era demands $2 trillion in annual deficits for AI, lunar bases, Mars bases, the Panama Canal fortifications he wants to build against China's encroachment, all into Latin America. The alternative is capitulation, like we're just done. We're just going to hand over the keys to China and Russia and kind of put our tail between our legs, like Britain did a number of years ago. A shell of its former self. So what are we going to do? Without low rates and a competitive dollar, China surges. In other words, both Xi Jinping and Trump are seeing the same thing, a weak U.S. dollar. Trump wants it to be a managed decline. Xi Jinping wants total chaos. Right now, with a national debt passing $37 trillion, interest payments gobbling 14% of the budget, these high rates are just a noose around Uncle Sam's neck right now. So guys, we are entering the global decline of the U.S. dollar, the U.S. Bretton Woods U.S. dollar system. And mark my words, it started on September 17th, 2025, and it will go on for years to come. Even Jerome Powell said he doesn't know what the economy is going to look like in the next 3 years. He has no idea. I have an idea. It's going to be bumpy. So that's the news update part of today's video. Now I want to tell you about today's sponsor, which is tied directly to everything happening on the global stage right now. Everything I just talked about. History is unfolding right in front of our very eyes with rate cuts, China and Russia's gold development. And I'm going to show you a gold copper company which owns a project with a resource estimate on American soil. And it's trading around its 2023 IPO price with a relatively tight share structure of only 12.7 million shares issued and outstanding. So, and most importantly, by the way, this NASDAQ-listed company is a U.S. gold copper development opportunity from start to finish. So check this out. Wall Street's Goldman Sachs just issued a comprehensive report that to own long gold is a high conviction trade, according to them. And history was made when gold finally took out its 1980 inflation-adjusted record high in USD terms. Russia and China have been actively building independent gold markets. China has opened its first offshore gold vault in Hong Kong. enabling trade partners with positive yuan balances now to convert that directly into gold via the Shanghai Gold Exchange, and it bypasses the US dollar. These immense global structural changes have sent gold skyrocketing, as well as gold stocks have also skyrocketed. The GDX index is up close to 100% in 2025 so far this year, as of late September when you're watching this. The gold sector has been massively outperforming, and with 89% probability of yet another rate cut coming in October and a 78% probability of a third rate cut coming in December, according to the Fed Watch tool, this could be the first gold stocks bull market in 20 years. So for this new bull market, I am profiling my quintessential gold copper exploration and development opportunity on U.S. soil. That is the sponsor of today's video, U.S. GoldMining Incorporated. Here is their ticker on your screen. They are easy to find right on the NASDAQ. So the tailwinds from Washington are exactly the opposite of what they were in the past 30 years. They are productive and constructive towards mining, and they're positively contributing towards the overall rally right now in mining stocks. Take a look at U.S. gold mining right now. Now, it's important to understand Alaska has been important for Trump's administration. Senators and the governor of Alaska have all visited U.S. gold mining's project in Alaska and its estimated mineral resource there. It's the largest undeveloped gold copper project in terms of proximity to Anchorage, Alaska. Trump also issued an executive order on day one of his presidency calling for the unleashing of Alaska's extraordinary resource potential. He did that on day one. Now, the administration then issued a second executive order called Immediate Measures to Increase American Mineral Production. And that executive order directs government agencies to immediately facilitate domestic mineral production to the maximum extent possible, including copper and gold. In addition to all of that, the federal tailwinds, support at the state level couldn't be stronger. Alaska Governor Mike Dunleavy is a strong proponent of economic growth and the infrastructure to support mining in his state. And he personally visited the U.S. gold mining project himself, along with support from the governor. The project has been visited by Alaska Senator Lisa Murkowski. And in April of 2023, U.S. gold mining went public with the symbol USGO on the NASDAQ for just $10 a share. Gold's price then was below $2,000 an ounce. Today, gold's price has climbed to over $3,500 an ounce and just hit new all-time highs last week. And U.S. gold mining stock is currently trading below its IPO levels. Look at this. Look at their Whistler project here. The Whistler project mineral resource estimate comprises 294 million tons at 0.68 grams per ton gold equivalent for 6.48 million ounces gold equivalent indicated, plus 198 million tons at 0.65 grams per ton gold equivalent for 4.6 million ounces gold equivalent inferred. But what you need to understand is how important this is. You should review their entire annual report, U.S. Gold Mining's entire annual report on their Form 10K, and you can study their technical report and their summary incorporated inside of it as well. For information on the project and the mineral resource estimate, you need to read it for yourself to dive into this, okay? Right now, U.S. Gold Mining share price and its market cap are lower than in April 2023 when it was spun off and went public. While other factors can impact stock performance, I think this supports a further look, in my opinion. So here's where this gets interesting in my view. The company's ownership structure is also very unique. Take a look at this. 78% of the outstanding shares are held by one parent company. One shareholder controls 78% of the shares. Another 4.5% is held by management and insiders. So that means over 80% of the shares are tightly held. And you guys know I love seeing this. I talk about this often. I love it. A pivotal catalyst is now underway, which is why I'm telling you about U.S. gold mining as these things are happening. Number one, we just got a historic Fed rate cut cycle that just started. Number two, gold, all-time high. Number three, Trump administration has issued 2 executive orders on Alaska, and the state is moving forward with their own groundbreaking road system that will connect this Whistler project with Anchorage, Alaska. And 4, the stock is trading below its April 2023 price when these other tailwinds weren't even in place. And now, with all of that being said, The company's most important moment since inception has just arrived. U.S. GoldMining has begun the process of an initial economic assessment, also known as a PEA, which stands for Preliminary Economic Assessment. Now, this study is a preliminary review of economic factors, and the timing couldn't be any better with gold above 3,600, copper at $4.55 a pound. So guys, do your own extensive research on U.S. GoldMining. Here's their symbol once again on your screen. They're on the NASDAQ. Make sure you review U.S. GoldMining's annual report. There are other filings with the SEC. Do all of this own research yourself. And we'll have links to everything in the description below. And we'll see you next time, everyone.